You've been taught that successful trading is about predicting the market. It's not. The best traders I know spend zero energy trying to forecast what price will do next, and yet they're consistently profitable. Here's what they actually do. They treat trading exactly like fishing. Not the romantic version you see in movies, the real thing. A fisherman doesn't control the fish. He can't make them bite. He can't force them to his hook. What he controls is his preparation, his positioning, and his patience. The market works the same way. You don't control volatility, news events, or where price goes next. But you control your strategy, your risk management, and whether you're prepared when opportunity appears. Most traders are splashing around, desperately trying to catch anything, and the market senses that desperation. Meanwhile, the professionals are calm, specialized, and focused entirely on process, not on the money they might make. By the end of this video, you'll understand why the moment you stop chasing profits is precisely when you become profitable. This isn't theory. This comes from tracking thousands of trades and watching the patterns that separate sustainable traders from those who eventually blow up. The fish will come when conditions are right. The question is, will you be ready? Welcome to Trader's Bible, the quiet room for market mastery. Let's get into it. Let's start with something most traders will never admit out loud. You're probably sitting there right now convinced that if you just study harder, analyze more, watch enough price action, you'll eventually predict where the market goes next. That's the trap. That's the exact mentality that keeps you stuck. Because here's what nobody tells you. Control in trading is an illusion. You have zero control over what the market does. None. You don't control when institutions decide to dump a position. You don't control when a geopolitical event sends volatility through the roof. You don't control retail sentiment or interest rate decisions or earnings surprises. The market moves according to its own logic, its own rhythm, completely indifferent to your mortgage payment or your trading account balance. But here's where it gets interesting. The traders who consistently win aren't the ones who predict best. They're the ones who've completely abandoned the idea of prediction altogether. They've shifted their entire mental framework from trying to control the fish to controlling everything about how they fish. Think about what you actually control. Your strategy, your risk management, your position sizing, your entry and exit criteria, the time of day you trade, which markets you focus on, how much capital you risk per trade, your emotional state when you click that button, whether you've actually tested your system, whether you understand the asset you're trading. That's it. That's the complete list. Most traders spend 90% of their mental energy trying to forecast market direction. It's exhausting. It's like standing at the edge of a lake, trying to telepathically command fish to swim to your hook. Meanwhile, the professionals are spending that same 90% on preparation. They're sharpening hooks. They're studying weather patterns. They're checking their line strength. They're showing up at the right time with the right equipment. And then when conditions align, they simply execute. No drama, no desperation, just calm, mechanical process. Here's the shift that changes everything. Stop asking, what is the market going to do? Start asking, am I following my checklist? Because the first question leads you into analysis paralysis and emotional decision-making. The second question keeps you focused on the only thing that actually matters, whether you're executing your process correctly. The market will do what it does. Your job isn't to predict it. Your job is to be ready when your specific setup appears. Now let's talk about something most beginners completely miss. When a professional fisherman looks at a lake, they're not seeing what you're seeing. You see water. They see a map. They see underwater structures. They see drop-offs where the bottom suddenly falls away. They see weed beds where small fish hide and big fish hunt. They see temperature gradients. They see current patterns. They know exactly where fish naturally congregate before they ever cast a line. They're not guessing. They're positioning themselves in zones where probability is highest, based on years of accumulated knowledge. A beginner thinks every spot in the lake is equally likely to produce a catch. A professional knows that's absurd. The fish follow patterns. They gather at specific depths based on temperature. They hunt in specific areas based on prey movement. Understanding this is the difference between randomly hoping and strategically positioning. In trading, this is called liquidity mapping. The best traders aren't just watching price bounce around randomly. They're reading the market like that professional reads the lake. They see liquidity pools. They recognize zones where stop losses are clustered. They identify areas where breakout traders will pile in. They spot the levels where institutional orders are likely waiting. These are the underwater structures of the market. Price doesn't move randomly. It gravitates toward liquidity because that's where the money is sitting. That's where orders can actually get filled. When you understand this, you stop casting your line into random areas hoping something happens. You start positioning yourself where the probability of a catch is genuinely higher. You integrate market structure and liquidity zones into your entry criteria. You're not guessing anymore. You're reading the water. And that completely transforms your trading because now you're working with probability instead of against it. If you're starting to see trading differently right now, do me a favor and hit that subscribe button. This channel is built for traders who want depth over hype, and there's a lot more where this came from. Notifications on means you won't miss the next one. Here's something that will either liberate you or make you uncomfortable, depending on how honest you're willing to be with yourself. Some days, a fisherman sits by the water for 8 hours and goes home with an empty bucket. The fish weren't feeding. The temperature was wrong. The pressure system wasn't favorable. Whatever the reason, it doesn't matter. 0 fish. Is that fisherman a failure? Did they waste their day? Should they quit fishing and take up something else? Obviously not. They knew when they showed up that some days produce nothing. That's literally part of the deal when you're dealing with nature. You can't control it. You can only show up prepared and see what happens. But traders lose their minds on 0 opportunity days. They sit in front of screens and force trades because they feel like they should be trading. They take B setups and C setups because they can't accept that today just isn't an A setup day. They convince themselves that surely there must be something tradable if they look hard enough. This is the equivalent of jumping into the lake and trying to grab fish with your bare hands because sitting patiently didn't work. It's desperation masked as activity. Some days the best trade is no trade. Some days doing absolutely nothing is the most profitable decision you can make. Some days protecting your capital and waiting for better conditions is the only correct move. But our psychology fights this viciously. We feel lazy if we're not actively doing something. We feel like we're missing out if the market is moving and we're not involved. We feel like we're not real traders if we go an entire day without taking a position. All of this is ego. All of it is self-sabotage disguised as work ethic. I track my no-trade days in my journal. Days when I wanted to trade, when I felt that pull, but my setup wasn't there and I successfully did nothing. You know what I found? Those no-trade days are just as valuable to my annual return as my winning trades, because every trade I didn't force is money I didn't lose. The market is always offering you ways to lose money. Every single day there are 1,000 opportunities to make mistakes. Avoiding them is a skill that's worth more than knowing when to enter. Because capital preservation is a direct contribution to your bottom line. The money you don't lose compounds just like the money you make. Here's the hard truth. If you can't sit through a full trading session without taking a trade and feel completely fine about it, you're not ready to trade consistently and profitably. That emotional need to be involved will eventually cost you everything. When was the last time you closed your platform? Because there was nothing to do and you felt good about that decision. If your answer is never or you can't remember, you just found your problem. The market doesn't care that you're bored. And boredom is not a valid reason to put capital at risk. Now let me tell you something that will probably sting a bit. Not every perfect trade setup results in a win. Not every flawless entry leads to profit. Sometimes you do everything right and you still lose money. This is where most traders break. Because they can't accept that randomness exists even within a structured approach. They need to believe that if they execute correctly, they'll win. And when they don't, they assume something's wrong with them or their strategy. Think about the fisherman again. Not every fish that bites gets caught. Sometimes the hook doesn't set properly. Sometimes the line breaks. Sometimes they're too strong and they get away. Sometimes you make a mistake during the fight and they slip off right at the surface, before the net. Experienced anglers know this. They don't spiral into existential crisis when they lose a fish. They don't question their entire identity. They don't throw their rod in the lake and declare fishing is rigged. They shrug. They analyze what happened if there's something to learn. And they cast again. Because they know the lake is full of fish. Losing one means exactly nothing in the big picture. Trading is a probability game. If your edge gives you a 60% win rate, that means 40% of your trades will lose by design, even when you do everything perfectly. Those 40% aren't failures. They're not mistakes. They're not indications that your system is broken. They're literally just the cost of doing business. They're the fish that got away. And they mean nothing except that you're actively fishing. The losses are part of the system. They're not bugs to fix. They're features. They're not problems to eliminate. They're simply probability expressing itself in real time. Once you truly accept this, trading becomes exponentially easier. You stop taking losses personally. You stop questioning everything after a string of losers. You stop revenge trading. You stop trying to make back what you lost on the next trade. You simply execute, track your statistics, and trust that over time, if your edge is real and your risk management is sound, the numbers will work out. This is the compound effect of consistency. One perfect trade execution means almost nothing. 100 perfect trade executions means everything. But here's where most people sabotage themselves. They want results now. They want the big win today. They want to prove to themselves, or worse, to others, that they can do this. So they abandon consistency the moment it gets boring. They abandon patience the moment it feels slow. They abandon their process the moment they hit a losing streak. And that's when they've already lost. Because the market doesn't reward urgency. It doesn't reward drama. It doesn't reward need. The market rewards people who show up consistently, execute their process, and have the patience to let probability play out over sufficient sample size. Let's talk about specialization, because this is where most traders completely miss the mark. Walk into any serious fishing community and ask what they fish for. You'll get specific answers. Bass, trout on a fly, deep-sea marlin, freshwater walleye. They're not trying to catch every species in the ocean. They're not bouncing between freshwater and saltwater depending on their mood. They've picked their niche and they've mastered it. They know the behavior patterns, the seasonal movements, the preferred bait, the best times, the ideal conditions. They've gone deep, and because they've specialized, they're actually catching fish consistently, while the generalist is spread thin across a dozen species, never becoming truly skilled at any of them. This seems obvious in fishing, but traders constantly miss it. They trade stocks on Monday, crypto on Tuesday, Forex on Wednesday, futures on Thursday, options on Friday. They're bouncing between day trading, swing trading, and position trading based on whatever looked exciting that week. They're trying to catch every fish in every body of water, with every technique simultaneously. And they're genuinely confused about why nothing's working. You cannot be good at everything. The amount of knowledge required to truly understand one market, one time frame, one strategy is enormous. The patterns you need to recognize, the nuances you need to internalize, the experience you need to build. It takes years of focused repetition. When you spread yourself across multiple approaches, you're guaranteeing mediocrity at all of them. You'll never get the repetitions needed to develop genuine expertise. You'll never build the pattern recognition that separates professionals from amateurs. You'll never learn the subtle difference between a nibble and a strike. Pick one thing, one market, one strategy, one time frame. Whatever speaks to you, whatever fits your schedule, whatever aligns with your personality. I don't care what it is. Just pick one and go deep. Become the person who knows that one thing better than 99% of people attempting it. Study it obsessively. Trade it consistently. Review every single trade. Track every pattern. Build a relationship with it that spans years, not weeks. This is how you develop an actual edge, not by knowing a little about everything, but by knowing everything about one thing. I trade one specific setup in one specific market during one specific session. That's it. That's my entire focus. And because of that narrow focus, I know when it's high probability and when it's marginal. I know how it behaves in different volatility environments. I know the subtle differences between the versions that work and the versions that fail. That depth of knowledge is my edge. And I could only develop it through aggressive specialization. You think you're keeping your options open by trying everything. What you're actually doing is guaranteeing you'll never be great at anything. Bruce Lee said it best. I fear not the man who has practiced 10,000 kicks once. I fear the man who has practiced one kick 10,000 times. Masters are made through repetition of one thing, not through sampling of many things. And here's the final piece that ties all of this together. The moment you stop checking your profit and loss during the trading day is the moment everything changes. Think about what happens when you're watching that number fluctuate. You're up $50, and you start thinking about taking profit early because you don't want to give it back. You're down $30, and you start calculating how to make it back. You're making decisions based on the dollar amount in your account instead of whether your plan says to stay in the trade or exit. Every decision made while focused on money is a decision made from emotion, from attachment, from need. And those decisions are universally worse than decisions made from process. The fisherman at the lake isn't staring at his empty bucket stressed about how many fish aren't in it yet. He's not calculating the dollar value of his potential catch. He's focused on his line, on reading the water, on his technique, on being present, on doing the thing correctly. The fish are a byproduct of that focus. They're not the focus itself. When you shift your attention to process, to execution, to doing everything correctly, the money comes. It has to. It's a natural consequence of proper execution over time. But when you focus on the money, you lose the process. And without the process, there is no money. Stop checking your P&L during market hours. Manage your trades based on price action and your plan criteria, not the dollar amount in your account. Your only focus during trading should be process execution. Am I following my rules? Is my risk management correct? Are my entry and exit criteria being respected? That's it. Check results at the end of the session. Everything changes when you make this shift. Your losing trades get smaller because you're not emotionally attached. Your winning trades get bigger because you can let them run without fear. Your consistency improves dramatically because you're not making emotional decisions based on how much you're up or down. The money didn't change. Your relationship with the money changed, and that changed everything. So which trader are you going to be? The one splashing around, desperately trying to catch anything? Or the one who shows up prepared, waits for the right conditions, and executes with calm precision? Because only one of those approaches leads to sustainable profitability. You came here thinking trading success was about prediction, about finding the perfect indicator, or learning to forecast market direction better than everyone else. That's what every guru sells you. But now you know the truth. The best traders don't predict anything. They prepare everything. Here's what we covered. Control is an illusion. You'll never control the market, but you control your preparation, your risk, and your emotional state when you execute. That's where the game is actually won. We talked about liquidity mapping, about reading the market like a professional fisherman reads a lake. You're not guessing where opportunity is anymore. You're positioning yourself where probability is highest. We discussed why doing nothing is often the most profitable decision you can make. Capital preservation isn't passive, it's strategic. And we broke down why specialization beats diversification every single time. Mastery comes from practicing one approach 10,000 times, not trying 10,000 approaches once. Finally, you learned that the moment you stop chasing profits is precisely when you become profitable. Focus on process, and the money follows naturally. The shift isn't complicated. Stop trying to control what the market does. Start controlling what you do in response to the market. Stop obsessing about the dollar amount. Start obsessing about whether you executed correctly. Stop splashing around, desperate for any opportunity. Start positioning yourself with the calm patience of someone who knows the fish will come when conditions are right. This is Trader's Bible, the quiet room for market mastery. Take what resonated with you today and sit with it. Real change doesn't happen from motivation, it happens from reflection. I'll see you in the next one.